Executing and managing insurance program business is both an innovative and multidisciplinary process, according to Rob Byler, President of Program Business from QBE the Americas. At the 2011 Entrepreneurial Insurance Symposium in Dallas, Byler, who has extensive experience in program management and development, spoke with Insurance Journal about the processes involved in developing and designing successful property and casualty insurance programs.
First thing is that the carrier and the program partner, or the GA-MGA, have alignment of interest and have mutual and consistent goals. Two, that we have transparency and management together of the business. Ours is a multidisciplined underwriting process, and so it's very different than a direct underwriting company, and we unbundle a lot of the services. So we have to make sure all segments of the transaction have good and professional operations involved. For example, most companies have a home office and they have a branch office system. You could almost look at program business and say the carrier is the home office and the GA is the branch office system. What's different is they're not employees, so we have to set up contracts that clearly state delegation of authority and what we're going to transact and do business together. So it requires a lot more due diligence and a lot more discipline in the day-to-day management. But you're looking for somebody who's on the GA side going to provide value, that they have a value proposition, and that they're going to deliver the underwriting expertise and the distribution that we can't normally access, but we understand the business and are able to underwrite it jointly with them. And I think those are the major pieces.
Byler says successful management of program business starts at the top, and that there must be a commitment of time, resources, and attention in order to assure a program's profitability. He describes some of the many responsibilities involved in maintaining quality insurance programs.
It starts with one, without a commitment by senior management to the business, that there will definitely be failure, in my opinion. Item number two is that it is a different underwriting model, and you have to put the time, resource, and energy in to ensure that you have the practices to manage it. And why I say from that is, if you're going to outsource business, if you're going to outsource underwriting, if you're going to outsource claims, loss control, et cetera, you're going to need to audit that business. You're going to need to do due diligence up front and make sure they have the professional capability to do it. You have to understand that they have the systems to do it. So there is a lot of work that is beyond what a normal insurance transaction involves. You have to be able to do the financial reviews and look at MGAs and TPAs and your other vendors and ensure their ongoing operations, and that an annual financial review is a mandatory type of thing. As you have the business come in, you have issues around bank reconciliations and how money is transacted depending upon the way you set up your receivables. So those are a few examples that give an idea of it is a business that requires many, many different people involved and operationally runs significantly different than a regular insurance transaction. If people don't understand that and aren't committed to put the time, resource, and energy into that, you're going to have a lot of difficulty with the business.